Okay, so it seems like unfortunately my my audio was not functional, but I hope that now it is. Okay, so like I said, first of all, welcome. My name is Danny, and this is the AvaTrade live Q&A webinar. Okay, so what we are doing today is we're gonna go through some questions. Okay, which I'm going to show you. We're gonna go through the flow of the webinar, how it's going to happen in every step. And then we will begin. Now, this concept of the concept of this webinar is a bit different than others. The purpose of this webinar is to let you guys ask whatever you want to ask and to get the answer online, to see the answer online on the screen. That's it. So let's just go through the structure here. So first off, we're going to begin with the common questions. So those are questions from the previous webinars and from previous other live Q&A webinars. Okay, it looks very much like that. And the dynamic questions is what I said a minute ago. So you guys are more than welcome to ask whatever you want along the webinar, regardless of the topic that I'm teaching. On the third part, it will be a little more informative. So I'm going to send you some links to save you the time and the trouble to look for them, certain things. And lastly, analysis if we'll have extra time. Okay, so and beside that, it's important to note that any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Okay, now this webinar is recorded anyway, so even if some of the things still need an additional recap, or you just want to see the webinar again to understand certain things, you're more than welcome to find it in our channel on YouTube. Typically a day or two right after the webinar is done, and there is all kind of versions there, even previous live Q&A webinars. You can just search and everything should be there. Okay, so I would like to make sure that the webinar is recorded. Should take me no more than half a minute, and then I'll be with you and we will begin. So thank you very much. Excellent. So it seems like everything is in place. And we're just going to begin with, as I said, the common questions. So let's just open the... Okay, there is a question here by Amutha. Oh, great to see you. Can you show AvaProtect for gold? Show an example of settings trade. Yeah, of course. Thank you. It's a lovely question coming from Amutha, which I'm going to paste at the, not here, right here. Yes. Okay, excellent. Yes, we're gonna get to that in a minute. What is the... There you go. Yeah, seems pretty good. Okay. All right. So the first question that we're getting today is how to do risk money management. Okay, let's keep reading the questions. We'll see if something is more is faster to answer. Then maybe perhaps we can begin with that, and then we'll have spare time for the questions that requires a bit more time. Okay, so the first one is how to do risk money management. The second is how can I know what asset to trade? Okay, all right. Is it good to use signals? I think we had that last webinar as well. Can I get a mentor from AvaTrade? Oh, that's an interesting one. Does AvaTrade offer any promotions? Okay, I'm just gonna cut straight to the chase in here. Yes. Ask your senior account manager. Excellent. All right, so everybody has different kind of promotions. I'm not really fully aware what promotions and who can enjoy them. Just ask your senior account manager. He has your file, and he can absolutely tell you if you can qualify for a promotion or not. Question from Natu Kunda, right? What is the buy or sell stop limit order? Okay, that's also a lovely one. So thank you. And we're gonna paste that here. Okay. All right. Okay. So as I said, right here, this is the answer. There is no need to go any farther than that. That's basically the answer. Oh, sorry. Okay. Can I get a mentor from AvaTrade? Let's see. AvaTrade does not provide mentoring, or maybe AvaTrade does not provide mentors. However, there are senior account managers who can mentor and provide assistance through the process. Or maybe, okay, so the idea, I'm just gonna explain it to you verbally. Okay, so AvaTrade does not provide mentors. However, there are senior account managers who can mentor, teach, and assist with trading. Okay. All right. With no extra charge. With no extra charges. Okay. Is it good to use signals? Okay. Is it good to use signals? What do you think, guys? It's actually a pretty good question. I like those kind of questions. Is it good to use signals, guys? What are signals first? Who knows what are signals? Signals look like that, and they can come from different providers. In this particular case, we're enjoying a signal from Trading Central. Okay. Just a second. There is a question here. AvaTrade is not yet approved my affiliate program account. Is it supposed to take that long? Again, you must contact your senior account manager to check what is your status with your process, because I need more information to give you an answer to that. I don't know where you're standing in the process. Okay, so to become a partner with us, okay, for the people who can, it's a process that you need to apply for, and then you get a reply which you need to comply, and your senior account manager can review and see where are you in the process and what is missing to complete the process. So I think contact your senior account manager, ask him where you are in the process, and see if he can give a hand or maybe advise what could help you finish the process faster. That's what I would do. If you can also include the reply that you've got from the affiliate department, so he'll be aware. Yeah, usually it's easy. It's things that are easy to solve. I hope that I helped. Okay, so as I said, signals are usually they look very similar to that concept. So you get support and resistance here. You have take profit and stop loss hypothetically. Just a second. How do I contact my senior account manager? You can do this in few ways. You have here, you see at the bottom left side, you have here the button for the chat. So you can choose to chat with us, and then you ask your senior account manager to contact you. Well, our customer service team is going to do that, or you can do it through WhatsApp. But I do believe 99% as soon as you've opened, you must make a deposit first. To get a senior account manager, your account needs to be funded. Okay, and then you can ask the customer service to provide you with one, or to contact the existing one if you already had an assignment. Okay, it doesn't cost, like I said, like I wrote here, you see, there is no extra charges for that. Okay, so you can try. Okay, so moving on, so the question that we're addressing now is it good to use signals? The answer is yes. Signals are, or maybe could be, an excellent additional layer of analysis, right? Right? Yeah, no, sorry. Right? Yeah, but the problem is, listen, the signals are amazing, right? There are instructions what to buy and what to sell. Okay? As you can see here, it's very technical, it's very direct, again, provided by Trading Central. Okay, and the way that it works is, as you can see here, those are specifications about what's happening on the chart and how you can possibly use it. Now, if I correlate that to making a cake, and somebody is giving me instructions telling me, Danny, listen, you gotta toss your dough into the oven for this and that time, but first I must know the ingredients. Instructions what to do is great, but first I need to have a plan. I need to know what ingredients I'm using and how much of the ingredients I'm using, and so on and so on. So signals are an additional layer. They're not, they don't solve learning how to trade, okay? It needs to go side by side. Analysis, risk money management, everything that you need to do, and signals are an additional layer. Okay, that's my personal opinion. Some people can rely only on signals, get lucky and hit the jackpot. I think that signals are, at least from my experience, I don't know any form of relying purely on signals and succeeding permanently. Okay, all right, so signals could, okay, it still require a plan how to use the signals. Okay, plan and strategy maybe. Right? Okay, just gonna put it down here. Question is if it will let us. Oh, how nice. Everything stays on the same row. Okay. How do I do risk money management? Okay, excellent. How do I know what asset to trade? Maybe I can get both of those birds with one stone. Let's try. Let's try and see how it goes. All right, so first of all, how to do risk money management, guys? Or maybe, sorry. Let me try and do it this way. Okay, don't be upset. I'm still going to address the question in a minute. Okay, so what is risk money management, right? Who asked me about gold? There was a question here about gold. Oh, it's Amutha, right? So let's take gold as an example, and then we can play with AvaProtect as well. Okay, so how can I open gold quickly? Just gonna put here in the search field gold, click gold. There you go. You see that it's still on the Australian Japanese yen. So I'm just gonna click here on the X, see, and it goes away. But if I click here sell or buy, it opens the sidebar. Yeah. Now risk money management. How does this work? Risk money management. What is risk money management? First of all, we're going to define what is risk money management. So risk money management is managing your position. Managing, or maybe knowing that if taking a position is not going to I don't want to put it in this words, because there are many purposes for risk money management, and not just to be able to sustain the margin. It's much more than that. Managing your risk, basically managing your account risk level, right? So what does that mean, managing your account, the risk level of your account? So I understand that with $10,000, okay, just a second, let's say $10,000, I understand that if I'm taking a certain position with gold, as an example, let's say that I want to take one lot with gold, okay? Oh, first let me explain to you. Right, so take profit, what it does is it closes the position automatically with the profit. What does stop loss does? The same thing, just the other way around. So if, for instance, I click here and I put here 1950 as an example. So if it gets to here, to the green line, I'll make 1950. If I'm buying, because I'm with a buy, when I'm buying and it goes higher, I'll make profits. When I'm buying and it goes down, I'll have a loss. Okay? When I'm selling and it goes down, I'll make a profit. And when I'm selling and it goes up, I'll have a loss. This is why when I'm buying and I'm aiming for 1950 and I have a take profit, which is going to close the position here and take the profit, right? So my stop loss has to be in a lower point. So buying, I want it to go up, but if it goes down, I have a loss, and sell. If it goes down, I have a profit, and if it goes up, I'll have a loss. In this case, we're going to take the almost the same proportion. Okay. Just a second. Oh, sorry. It needs to be this way. There we go. Okay, and now what are we looking at? Okay, so we're looking at risk money management question, which is here, what is risk money management? So we have explained it. Okay, and we are now looking at a balance of 10,000 with a potential profit of 4,000 and a possible loss of 4,000. Okay, so we're gonna put here take profit. Okay, and we also have it, the stop loss 1868, and possible loss is, let's see, 4,000. Yeah. So what does that mean? That means that my exposure for this position, exposure equals 40%. Okay, how did I do the math? Multiply, oh sorry, divided by 4,000 equals 40%, right? Right. Yeah. So is it considered a good risk money management here in this case? Is it okay, or is it a bit too high or manageable? What do anyone, guys? Is it too high or is it manageable? It's way too high. Okay, Phil, do you mind explaining why is it too high? Because I'd rather have some kind of explanation. Okay, so 40% is too high, but I need to understand why. Why is it too high though? Okay, okay, Eric as well is too high, but guys, why is it too high? Look, I have 600 from 10,000 if I lose. Okay, so let's make it 5. $10,000 minus $4,000. I'm still gonna have $6,000. So I don't get what the problem is. Is it too high? Okay, so John, too much risk on a single trade. Oh, now we're getting somewhere. So we understand something very important here. We understand that if it's the only position, it might be okay. But because we have additional positions, so that means that we might reach a certain level that can wipe out the account. Now, furthermore, I want you guys to notice here something is in addition, yeah? If I'm looking at the ratios here, okay, that what I need to use, the margin impact. In a minute, I'm going to explain exactly what is the margin impact and why is it so important to risk money management. But okay, so the margin impact is 9,540, which means that I need to use 95% of my account on that position. Okay. Okay, and margin impact equals value divided by leverage. Sorry, margin impact. Okay, and that means that what? Why is it such a problem? Why is this position is, let's say it's not the best risk money management? Who can tell me why is this position not the best risk money management? Look also at the percentages. Yeah, I wrote it for a reason. You see, 95% is what I need to use on that position. Excellent. So we understand that first of all, to take two positions with this amount, can I do that? Absolutely not. Not even close, right? To be honest, it's enough that it will flinch $500, less than $500. Let's see it together. 10,540. minus 10,000. That means that if I'm losing this amount, what will happen with my position? If I lose 460, what will happen with the position? Who knows? What will happen with the position, guys? So we understand exactly, it will be closed. So we understand something very important here. Not only that the stop loss can show me how much far away am I from my loss, I also understand that with everything we wrote down here. So I am exposed 40%. Okay, stop out, exactly. And I'm using 95%. So everything points that I'm using almost everything I have on my account in a single position, right? So I'm not able to diverse, and I'm not able to do risk money management, and I'm not able to sustain my margin. Okay? So what I'm going to do now is I'm going to try and change a single thing and try and get better proportions. So instead of one lot, if I do this, will it be okay? Let's try and see what the impact is. I've changed from one lot to just 10 ounces instead. And I'm aiming for 400 and I'm aiming for 400. So my exposure is no longer 40%. It's now 4%. Yeah. Look how nicely everything is falling. It's okay. It's falling to its place. Just a second. Okay. And in here, that's 940. That means that this is 9.5 now. Okay. How do you feel? How do you feel about the new numbers, guys? Is it better than before? Is it better than before? Let's keep that question. I want to focus on that question. Okay. How is it? How is it now, guys? How are the numbers are now? How do you feel about the numbers now versus the numbers that we had a minute ago? Is it better now with 4%? Much better. Exactly. Exactly. Why is it much better? How is it now so better than before? Now I have left if God forbid if I lose, I'm left with 9,600. Right? Again, this question, if I lose 460, right? A minute ago it was a problem. A minute ago, if I would have lost 460, I would be in a serious problem. I could have wiped the account. But if I lose 460 now, what do you think? Will something happen? If I lose 460 now, will something happen? Better than, okay, to God, risk 2% of the account. Could be. Again, I don't want to stick with numbers, John. I mean, I understand what you're saying. It has a lot of logic, but again, I'm trying to avoid that. I'm just teaching something that is general for you to be able to maneuver. Okay, I'd rather teach you guys the logic behind certain things so you can make it on your own rather than to tell you, listen, this work that way. Okay, so this is the reason that I'm teaching everything from a place of logic and not from a place of just giving a lecture. Okay, let's understand the logic here. When I'm using 10,000, okay, when I'm using, thank you, of course. Believe me, if my purpose was only to give knowledge and I wouldn't care how, so I would just give a lecture and I wouldn't even ask any questions. Okay, so of course, thank you. Okay, so I'm looking at 10,000 and I'm trying to answer here the risk money management question, management question. So I'm looking at several things. First of all, I look at the stop loss and I saw how far away it's from my entry. The second thing that I did is I understood that I am capable of taking this position. For instance, this is a position that I can't even take. Yeah, I don't have enough money. For instance, even that a position that I can't take. So I took one lot, which is pretty much on the edge, and I've compared. Now I reduced this to 10 ounces instead of 100, and now everything makes much more sense. Now again, you must understand, and I'm looking at $10,000, right? If my account would have been, okay, so let's make this comparison quickly. Okay, if it would have been like that, as an example, so everything we see here would have been the same as a minute ago, right? Because everything is compared to your balance. When you're looking at the risk money management, the first thing that you must look at is your balance, okay? And you must decide how much on this position am I going to risk. Okay, will it be 2%, 5%, 10%, whatever you want? Okay, so let's suppose, okay, schedule on an exposure level. Okay, exposure level equals exposure level. You have your position exposure and you have your account exposure. What is the difference? And please tell me if there is any difference. Why there is position exposure and account exposure? Now everything is becoming crazy, right? Position exposure, I understand. We just saw that. I'm exposed 4%. If I lose 400 out of 10,000, that's great. No problem. So this is position exposure. Let's mark a V here. Success. What exactly is account exposure? And why do I care? Anybody has any answer to that? Account exposure versus position exposure. Why is there a difference? Is there any guarantee that this position will fulfill itself exactly as we plan? Is there any assurance, any guarantee it will go exactly as we plan? We take a buy or a sell. Is there any guarantee it will go exactly as we plan, or it might be delayed? Guys, you have no idea, okay, how liquid the market is, and sometimes you're going to plan for a position to make this much money and during that much time, but it's not going to happen. Okay, it's quite frequent that you're going to play something and the market is going to exactly. Who wrote this down? Perfect. Well done. Okay, now this is a secret that people just, it's not easy to pay attention because people think about the position exposure and they forget that the whole account is exposed, right? So if I take this position, the bottom line here is 4%, right? If I have another 2 positions a week, okay, meaning 3 positions per week, okay? Multiply 4%. Okay, multiply 4 weeks equals 12 multiply 4. How much is 12 multiply 4? Let's see, I think it's 48, but right? Yeah. How much am I exposed? Look, we just had a single position, right? We just had a position with 4. How did we get to 48? Because this is all of the positions together. Now, of course, I'm not going to keep all of my positions together. I mean, I can, but it's not necessarily my strategy. But my point here is that when you're doing risk money management, don't just think about a single position. Think about a single position, but keep in mind that you want to leave more margin for different things. You want to be able to pull yourself out if you need to. You want to be able to diverse, to hedge, to just sustain the position for more time. It doesn't really matter. The point here is to let you maneuver more wisely with your margin. Okay, the example that I used here, that I'm using 95% of my account, was to show you how aggressively this position is compared to my balance. Okay, and if it even flinches against me, I'm gonna be in a problem. Okay, so this position might be better, but again, I need to know how many positions I'm planning to make, and so on and so on. Do we have any questions regarding that? Because I want to carry on. Oh, and I nearly forgot. So we had that one, but I'm gonna first just okay. So I'm just gonna put down here the answer. The risk money management. Risk money management is purpose to manage your account so margin will be stained wisely and to prevent wiping your account. Okay, there you go. Comparing your positions, specifications with your balance. Yeah. There is a question, how can we avoid stop out? That's exactly, you see how I just love this webinar. Not to Kunda, right? Not to Kunda. So how can I avoid a stop out? That's exactly what I thought just now, right? Okay, never mind. We'll get to that in a minute. Not in a minute, but hopefully we'll get to that soon. Why isn't it let me paste your question? It's very unfortunate. Hold on. Maybe now. Will it work? Yeah, seems like. Seems like. Okay, nice. Oh, sorry. Will it work? Oh, there we go. Yeah. So we're gonna move on. Oh, we can't move on. We still have that question to how can I know what asset to trade? Okay. Okay, should I close? Let me keep it this way for now. Okay, and let's go for the bare minimum. Let's switch it this way. There we go. Okay, right. So let's suppose that I'm looking at gold. Look, every time we're taking off a zero, right? Now, since I guess that this is the minimum, but I can't be too sure. Okay, let's make this one 4, isn't it? That's 4T, right? Yeah, it seems like it. So 40 and 40. That stays the same. I think so, right? Oh, sorry. That's 40%. That's 40%. That's this one we must get rid of. This something doesn't add up. Yeah, so this scenario is when your balance is 100, not 10,000, right? because I'm addressing the question, how can I know? Let's get rid of the risk money management. How can I know what asset to trade? Okay, so I'm looking at gold. Gold, let's suppose that I have $100 and I'm with gold. And I'm using almost the same specifications that I used just a minute ago with the other example for risk money management. Now, is gold a good asset for me to trade with $100? What do you think? Look at the numbers. Let me just correct that one. There we go. What do you think? Oh, sorry. Let me scroll down a bit. There you go. There you go. I'm taking, this is the bare minimum. This is the bare minimum. You see, I have only 0.01. I am, let's suppose this is not 100. Let's suppose it's not 10,000. It's 100. And I'm looking at gold and I'm thinking I want to trade gold. Is that a good asset for me to trade? Yes or no? Yes or no, guys? Okay, so Aquila, you wouldn't do that. If you can please explain why you wouldn't do that. Because then I can't do anything else. Okay. Okay. So we understand. What do we understand? We understand that gold, if we want to trade it with $100, it could be a problem, right? No, John, there is no significant move on the chart. Yes, that as well. But again, it's not about the movement. It's about being able to take this position and still breathe. You understand that this margin, okay, so let's just clear something out here so we can proceed with ease. Okay, 1 ounce price per unit for gold, 1,900. Oh, sorry. There we go. Multiply 1 unit equals 1907. Okay. Right. The leverage here is 1 to 20. Now, because it's buying, because it multiplies my buying or selling power. I can divide the 1907 by 20. And this is my necessary amount to hold or open a position. So margin impact is 1907 divided by 20. Now again, in this scenario, we understand that gold with a bare minimum is going to cost us 95% of the account. 95% of the account with a single position with gold. Okay? So if I'm doing it with 10,000, no problem. Even if I do this with 1,000 still, could be manageable. If I'm doing this with $100, which is the minimum, it's going to be very, very challenging. Why? Because again, I must use 95% of my account for a single position. Now, if I'm looking at oil as an example, let's try and see oil, right? Now, oil is a bit different. And if I'll take 0.01, I see that it's a bit cheaper than gold. It's a bit, again, the margin impact, right? It's not. It's much cheaper than the on the value, but the leverage here is 1 to 10. So the margin impact is almost the same. Now let's try and take coffee as well and see if it's Okay, now coffee, because the lot size is bigger, is much higher than gold and then crude oil. So is it a good asset to trade? Because the question here, how can I know which asset to trade? Okay, so is it good to trade? Absolutely not, because we don't even have enough money. With 100, again, with 100, okay, balance of 100, right? Let's take another one. Let's exaggerate. Let's take it to the extreme. Nasdaq, is it a good asset to trade? Let's see. 0.01 with Nasdaq. Let's see. Not even close. Not even close, yeah? Because Nasdaq cost 780, and if I have 100, I'm not even close. So we understand. How can I know which asset to trade? You must compare how much is in your balance, how much the margin impact is, what else? How many positions you are planning to take, and what size. All of those things is to choose an asset, because there is no other way to know the asset is good or not, because all the assets are good. Okay, and everything is good, but you must compare it to your balance to see that you can do that and still able to maneuver. Okay, because we saw, even if I have enough money with gold, right? The example that we, oh, sorry. So even if I have enough money, it doesn't necessarily mean that I should take this position if I'm using 95%. Okay, now I've been requested by Amutha in the beginning of the webinar to show the AvaProtect, one of the scenarios. So we're gonna have a scenario with a profit, and a scenario with a loss, and I'm gonna explain to you how AvaProtect is helping us and what does it cost. Okay, we have few platforms, MT4 and MT5, and we have the web trader and the AvaGo, which has AvaProtect. Only Forex, silver, and gold. Doesn't have AvaProtect. Yeah. Yeah. So what we're gonna do now? Oh, sorry. Let me just first write down the definition for that. AvaProtect. It lets you protect the position for a certain time frame, whatever you lost during the coverage, you will get back. There is a fee when using the service. Now, what exactly does that mean? So I have 1 hour, that's the bare minimum, and if I climb up, look what happens with the fee, right? The fee keep on increasing. Oh, hold on. Something here is a bit different. Hold on. Sometimes if you refresh the page, it does the magic. Okay, so I click it. No, it stays the same. Okay, never mind. Enjoy that. You see, 53 is for 1 hour. Then I increase, it becomes less. Now it becomes less. Now it becomes more. And now it becomes even higher than before. We're still adjusting the product, but again, whatever it shows, that's what it's gonna charge you. Okay, nothing else. Now, if I'm looking at this scenario, we understand that with 0.1, with 10 ounces, if I'm looking for $25 movement is an example, okay, and I'm looking for $25 down, right? I just did it in my head, but you know what? I'd rather do it with a calculator. There you go. Oh, sorry. Now, in this scenario, because we have $25 difference, multiply 10, we can approximate 250 as profits or loss. Okay. Why is it showing it to me in red, guys? You remember that I told you that when we are buying, our intention is going up. What number did I put here? Higher number or lower number? And this is why it's red. Okay, it needs to be the opposite. Okay. Now, in this scenario, we're expecting $250 profit. The fee here is quite considerable. It's $70. Okay, but I'm sure that people here will more than agree that it's better to pay 70 and get back the 250 rather than to lose the 250 and that's it. Yeah, so that's basically how it works. There is no much more to it. Anybody has any questions though? I do think that if there are any questions, please share with me now. Amutha, you're the one who asked me to do this, so I hope that you watched. I hope that this makes more sense with AvaProtect. Yeah, basically, if there is anything else, feel free. Of course, with a pleasure. So what else we have here? Can I show protect? Okay, so we just done that. What is my, okay, so buy and sell stop limit are right here, presented here as take profit and stop loss. Okay, and the additional, what we used to call sell stop or buy stop. So this is when you're aiming for a price to take a sell, hypothetically, when reaching the sell before, let me put it this way, if I don't want to sell now, I think it might be more comfortable to sell in a higher price. Okay, so what I'm gonna do is I'm gonna put here 1970, and if it gets to 1970, it's gonna start with a sell. Oh, just a second. Oh, sorry, this one is for a buy. Now it's for a sell. There we go. Okay, so 1970. You see here it says sell. Sorry, we were on a buy in a minute ago. So if I click here sell and execute when price hits, it's gonna initiate here a sell. It's gonna begin a position at 1970. Okay, remember that when it does that, it's gonna go for the sell price and not the buy price. Yeah. Okay, so you're gonna begin with a small minus because of the spread. Question here, Abdul, where is the option trading in MT5? I think you're looking for, are you looking for an options platform or are you looking for an option in MT5, a certain feature? If you can elaborate your question, that would be great, Abdul. Because options is a different platform for options, which is called AvaOptions. Oh, we almost ran out of time. I wanted to share with you the links. What a shame. Let me share with you the link now. Okay, so I'm gonna paste it for you guys in the chat. This is, guys, the Education Center. It's very, very helpful. Very helpful. Have a lot of videos and tutorials. This one is for the help center and the for other questions you might have. This one is for a real account, right? You had enough with the demo. And the Academy is more into explanations, how to do certain calculations, even things that I've explained today. You might find a nice recap on the Academy. And it's entirely for free now, so enjoy it. Enjoy it as much as you can. Yeah, now as promised, at the end of the webinar, you're gonna get a nice benefit, okay, which is the Q&A benefit, which will let you enjoy one-on-one premium market review with your senior account manager, free of charge. So you can give them your code. This is your code. Whoever been on the webinar, it's a one-time code to enjoy one-on-one premium market review, which to my personal opinion, there is nothing more useful than to get the market review on the spot with the senior account manager, to be well aware of what's happening on the market, to get refreshed. And that's it. I hope that the people that I could give an answer to are satisfied. And I'm sorry in advance, guys. I see that there are some questions that I couldn't get to because I was in the middle of the explanation. But keep in mind, I'm just a human being and I'm trying to do the best. But we always have a following week with the live Q&A, and you can come and join us again in a week and ask your questions. Hopefully, then we'll have more time to it. Abdul in MT5, where is the future trading? Oh, yes, you were looking for Ava options, my friend. That's something else. I'm sorry, but that's something else. Just a second. What you're looking for, Abdul, is called Ava options. Okay, so you must okay, so go to avatrade.com. Don't log in. Okay, don't log in. Right, and then click on trading platform tab, and then click on Ava options. I'm 99.99% sure there is also a link there with an explanation how to download it, but I don't want to commit to to anything. So you should try, go to AvaTrade, don't log in. Okay, at the top you have trading platform tab, and then you click on the options and it should show you how to get it. Guys, I really have to fly. Thank you so much for coming and joining the live Q&A. Have a good rest of the week. Make a lot of profits, and best of luck.